Hi guys, Andy here. Let's have a look at the NASDAQ futures. For the record, today is Monday, November 20th. Time is around 4:45 p.m. GMT. So I will start in the higher time frame, as it has been a while that I made a higher time frame analysis of the NASDAQ. And so my take on the NASDAQ is, here we are looking at a weekly chart, that we made a wave one right here, a wave one in the higher degree that ended with an all-time high. And from there, we went down, probably a wave two correction, which finished here. We did not reach our 0.5 FIB retracement level, but instead we started to turn up again from here, from this level. And so now that means here in the higher time frame that we probably are working on this wave 3 here in the higher degree. This becomes our target, but of course we won't go there in a straight line. We should go there again in 5 waves, because wave 3 is an impulsive wave, and an impulsive wave goes in 5 waves. And so now I think this structure we are seeing here from this low is a wave one we are doing. So the first wave one of this higher degree wave 3. This is what we are working on, in my opinion. If you follow me for a while, I always presented you in the weekly time frame, in the higher time frame, also a bearish analysis or a bearish forecast. I didn't put this forecast on my chart because it's more, or it's better to assume the bullish forecast. I believe the bullish forecast I just showed with this wave 3 as a target, this wave 3 here as a target, because current price level was here in this area, as you can see, and our low is here. So it's just better to respect the bullish nature of the Nasdaq, and therefore I always took the bullish scenario as my primary scenario. However, I shared a bearish scenario with you in my earlier videos, and that scenario assumed that this wave 2 low here was not finished yet. Then it looked like this, that from here we came down in 3, 1, 2, 3, making a wave A low like this. Then this structure was corrective as a wave B, also in 3, 1, 2, 3. And then from here, we should expect another impulse down, a C wave down, taking out this low to make the wave 2, and probably going here into wave 2 area. But now, last week, as we took out the high right here, we will see it in a minute when I go to the lower time frame. We actually got confirmation that this here was our wave 4 low, and so now this structure really looks like 5 waves, and so therefore the flat structure I was talking about, the regular flat structure, the bearish regular flat structure here in the weekly, is less likely to play out. I would say this here is no longer 3 waves, or I believe it's very hard to interpret this as 3 waves up, as a corrective wave up. I would say, now it really looks like we have 5 waves, 1, 2, 3, 4, and we are working on the 5th. So also here in the higher time frame, I would say, with the data we currently have, this really looks like an impulse, and therefore I think this further strengthens the bullish case here in the higher time frame, in the weekly, as we have an impulse here up. I would say for now this impulse looks kind of Yeah, perfect. What we should expect from an impulse. We have 5 waves, 1, 2, 3, 4. We're working on the fifth one. Also, here in RSI, we have a nice pattern in the sense that here or wave 3 gives us the highest RSI reading, and so now we are working on the fifth wave, and we are seeing this divergence right here. So for the moment, I would say this is really a textbook impulse pattern we are seeing here in the higher time frame. Now that's so we took out the wave 3 last week. I talked about this in my lower time frame analysis. So now what we should look at, I believe, maybe no, for the moment I will still discuss this here in the weekly. So now the question is actually, as we have this fifth wave up, actually we already fulfilled the minimum requirement to have a complete structure. What the fifth wave should do is taking out the wave 3 high, and this is what we do. So technically that could mean that we start to reverse from here as a wave 2 down. However, I mean, from here, from this low, from this wave 4 low, what could happen is, or the wave 5 could finish soon somewhere right here. But of course, the first impulse up we are seeing now could also be the wave 1 of the wave 5. And so then we get more something like wave 1, 2, 3, 4, 5. So both structures are possible. This being a fifth wave as an impulse, or just this the wave 1 of the wave 5, and then we get 1, 2, 3, 4, 5, something like this. So therefore, let's go now to the lower time frame. Like, we will, from the weekly chart, we will not immediately see this. We have to analyze this in the lower time frame to see which kind of fifth wave will play out. So now if we go to the daily, here you can see my count I just discussed in the weekly. So here from our wave 2 low, this here was our wave 2 low, we got a wave 1, 2, a wave 3, impulsive and strong wave 3 here in the daily, and then we came down as a wave 4, a triple tree correction, WXYXZ, into the wave 4 area. And then from here, we have a strong reaction up. This was the moment that the S&P 500 reached the extreme boundary of a wave 4. This is also the moment here where the NASDAQ reached this support level, and from here, very strong reaction. And in the meantime, we see that this structure is a new cycle starting from here. We took out the wave 3 high, which is the minimum requirement for a fifth wave. So like I said, could be that this here is just the fifth wave, like this complete structure is the fifth wave, but at the same time could also be that it is the wave 1 of the wave 5, and then we get 1, 2, 3, 4, 5. So more upside. And so to put it into perspective, like here we have the all-time high, but like what, of course, the all-time high has some kind of symbolic value, but in terms of analysis, like from here, this here is a different cycle. A new structure has nothing to do anymore with this structure down here and this structure up. So it is not really relevant, like, to take this as if you want to go short, as a stop loss level or whatsoever, or a target. Of course, the market always has the tendency to chase this kind of highs, or like, at least if we get there, to have some kind of reaction that might happen, but in terms of like this does not really have a predictive value. This is my point. So it's not because we had an all-time high here that we now know that we will have a short fifth wave or a long fifth wave. This has nothing to do with each other. And so actually the only what we can do to kind of yeah to have a better view of our fifth wave is simply looking at the lower time frame, and each time we have a complete structure. Now assume that we soon have a complete structure, then we should simply know that it can be the fifth wave. So if we have a complete structure, what should happen is we have a pullback, and then this pullback can be a wave 2 down. If we have a larger fifth wave, like as a wave 1, 2, 3, 4, 5. But we should also be aware that if we have a complete structure here and we have a pullback, that we can also take out the low right here, and that would mean that this wave 2 here is starting. That's a possibility, because the minimum requirements for our fifth wave are fulfilled. We took out the wave 3 high, so that means that our fifth wave here can soon be in. And this is actually also my favorite scenario for now. My favorite scenario for now, simply because of the other indices, it looks like their move up, like in the DAX, in the Dow Jones, it looks like a corrective move up, I would say, and it looks like they need more downside. And so if the other indices will have a corrective leg down, then it is hard to imagine that the NASDAQ will do an impulsive wave rally as a fifth wave. So therefore, for now, I prefer the scenario of a short fifth wave in the NASDAQ. And so we can have a look now at the lower time frame. Where are we in this fifth wave? So here we are looking at the 4-hour, and my take on it is that I believe this here was our wave 1, a very shallow wave 2. I think we are still working on the wave 3. A wave 4 should follow, and then a wave 5 of 5. So I think there is still some upside to come in the Nasdaq, but we are close to finish it. And as the minimum requirements are fulfilled, then depending on which time frame you are trading, of course, but like if you are trading the 4-hour, let's say, then then I do not really know if it is very wise here to chase this little upside which is left. Of course, if you are trading like the 1 minute or the 5 minute and you find an entry in the 1 minute and the 5 minute, I still think the direction is bullish for the moment, the higher time frame direction. So if you find an entry on the lower time frame, I think you're still right with going long. But from a 4-hour perspective, this is ending my opinion. Let's have a look here at the subwaves, and therefore we go to the 1 hour. Like this would be my count right now in the 1 hour. So here we have our wave 4 low. Then I think here this is the wave 1. We went up in 3, 1, 2, 3 with a shallow wave 4, and then a fifth wave right here. So also here then our wave 3 and our wave 3 of 3 have the strongest RSI reading. This looks good. then a fifth wave here ending with divergence. This is also good, I would say. Then I would go here for an expanded flat correction as a wave 2, shallow wave 2. But I also told you immediately when I saw it, I also saw it in the DAX, that it looked like we were starting a new cycle from here, and this is also what turned out, or what we are working on now. So from this low, this wave 2 low, I would say again, this is a wave 1, this is a wave 2, another shallow wave 2. Then here again, or wave 3, the strongest RSI reading for now, another shallow wave 4. And so now we might be working here on the wave fifth wave up of this wave 3. We are having again divergence here. We broke the RSI trend line as a wave 4. So again, this looks quite good in terms of Elliott Wave theory. But then once we get here, once we take out this high, which might happen today soon, we will see. We are quite close now for the moment. Once we take out this high, then in my opinion, we still only have two waves. I would count this as 1, 2, 3. I mean 3 waves, of course. And then I think we might have pullback as a wave 4, and then a fifth wave should follow. So if I look here at the subwaves, I think we still need to finish a 3, wave 4 pullback, and a wave 5 up. So therefore, like I said, main expectation is that we see some more upside, but I believe this upside is really limited, because in terms of waves, like, okay, if this is our 3, then you should know like 3 cannot be the shortest. So if our wave 1 is the longest, then the second longest should be the wave 3. And then if our fifth wave should be shorter than the third wave, you can automatically see that not much upside is left. This might be an interesting target area right here. From here we can react, I think, if we take the length of the wave 1, the length of the wave 2, then here this area between the 1 and the 1.618 pip extension is usually an area from where we can expect a reaction. So as you can see, not much upside left. So therefore, if you're trading a higher time frame like the 4 hour, I don't think it's really wise to chase here more upside unless we get like a really clear and nice pullback. Like, okay, if we get a nice pullback as a wave 4, this might be a chance, but again, could be that this wave 4 is very, very shallow, like we had right here. The pullbacks are really shallow for the moment. Should you enter this kind of trades, might be risky, especially because we already fulfilled the minimum requirement, taking out here the wave 3 high. So I would say still more upside, but if we took out the wave 3 high, like maybe there is a chance to interpret this wave count like something like this. It would not be my favorite count, definitely not, but I can imagine that another Elliott Wave analyst comes up with something like this. I would say 1, 2 here in the beginning, then this extended wave 3. So the 4 can be located here, and so actually by just taking out the high right here, it can be finished, and we can start to return from here. So therefore, might be risky to chase the remaining upside, which is left right here.